Welcome to the Fortune Fastlane YouTube channel. Penny stocks are investments for individuals who are willing to take on higher risk ventures. They trade on OTC markets, which means that most of them aren't large volume securities and aren't listed on more widely used exchange markets. Instead, they circulate primarily among a narrow group of investors. To help investors make more informed decisions, 15 brokers were surveyed. The top pick for 2022 is TD Ameritrade. It combines flat rate pricing with great trading tools and research capabilities. If you want more of this content, subscribe to the Fortune Fastlane YouTube channel and hit the notification bell. What are penny stocks? According to the U.S. Securities and Exchange Commission, penny stock refers to a security issued by a very small company that trades for less than $5 per share. The most common penny stocks are companies that trade for pennies per share or less than $1. Fidelity is an online broker with $0 commissions, industry-leading tools, research, and services for investors of all types. It helps over 40 million people invest their money successfully, so it's a winner for everyone. Despite charging $6.95 per trade, TD Ameritrade offers the most comprehensive selection of trading tools through their Thinkorswim platform. While not our top pick for trading penny stocks, they finished first in terms of platforms and tools, coming in at number 2 overall among all brokers. Charles Schwab is a classic investment company with a solid selection of stocks, funds, and banking services. It offers a balanced selection of trading tools for investing and researching stocks with the Schwab Street Smart Edge desktop platform. The broker is better known for retirement and long-term investing, but helps penny stock traders trade efficiently. When using TradeStation for trading OTC BB penny stocks, the cost under the TS Select and TS Go pricing plans is $0 per trade up to 10,000 shares. TradeStation won our award for the first best trading technology and offered a terrific trading platform loaded with advanced tools. Interactive Brokers is a relatively expensive stockbroker. However, the broker offers lower margin rates and a larger selection of penny stocks you can short. When you compare with different brokers, you will see that the Interactive Brokers is a better option for trading penny stocks. Is it a good idea to buy penny stocks? How you decide to invest your money is highly personal, but here are some tips for when you're considering penny stocks. Penny stocks are risky. They trade for less than $1 per share, not because they're more valuable, but because there's little room for error. Fraud can be tough to identify, especially with the internet these days. Unfortunately, it's better to be safe than sorry and avoid pump and dump schemes that can take a huge toll on your company. Be aware of paid promotions, as many emails claiming big returns are a scam. Before you buy from a company, make sure to do your research. Many sources can tell you information on their business and product. Look into what they sell, the way they conduct business, and how long they have been in operation. Do yourself a favor and use a broker who offers flat fees or $0 trades. Over-the-counter stocks are not regulated and require companies to make less extensive disclosure. These regulations make it difficult for investors to research the company, which can often lead to riskier investments. It's legal to trade penny stocks, and many people choose to do so. However, it can be illegal if you're doing so without any information that is not public, which is typically called penny stocks. They are also more prone to trading and market manipulation than larger cap companies. There's always risk involved when you purchase stock, but penny stocks are often targeted for scam schemes. Occasionally, promoters for such scams may lure in investors by touting pumping up the share price before dumping their shares at the expense of high-risk investments. Buying or selling stocks using insider information is a serious federal crime, with maximum sentences as high as 20 years for individuals and up to $25 million for corporations. Penny stocks are high-risk investments. Make sure to research the company whose stock you're interested in and be wary of outsized claims of returns. It's also important to use reputable brokers such as Robinhood. Penny stocks are usually tiny companies with low market capitalization, and they require a lot of time to grow. This means it's tough for the investor to get their money back over the long term. When it comes down to investing in penny stocks, many retail investors prefer to use index funds that have better returns, rather than using them as an investment. Penny stocks are best avoided unless you're reviewing startups through an angel investing experience. Penny stocks are challenging to trade because they often have volatility, liquidity issues, and problems with research that make it harder for you to get in and out of positions. They are also difficult to research. Online stockbroker fees can vary widely depending on who you use. Before choosing your broker, do some research to find one that charges flat-free trades instead of per-share rates. We also recommend avoiding brokers that charge a monthly platform fee, data fees, or monthly minimums. Those fees hastily add up. TD Ameritrade charges $6.95 per OTC trade, while Fidelity doesn't charge anything. This means you'll pay $6.95 and nothing, respectively, to buy shares of Company A. Example 1. On a share trade transaction, Interactive Brokers charges $0.0035 per share. If you buy 20,000 shares of XYZ at 13 cents per share, a total of $2,600 will be charged per trade. 20,000 shares times $0.0035 per share is $70, and $2,600 times 0.5% of the value is 13 cents. Can you get rich off penny stocks? Research has shown that the majority of investors who trade penny stocks lose money. It's unfortunate, but most success stories come from social media, where they don't have to submit any earnings data. There are many types of scams that may lure beginner traders into thinking they can make a quick buck by sinking money into penny stocks. Chat rooms, newsletters, and live streams are common subscription options for beginners to be wary of. How do beginners buy penny stocks? For beginners who want to buy penny stocks, the following checklist can help improve your experience. These tips cover buying and trading penny stocks, so you'll know what to expect when you're looking at a company. Pick a broker with a good reputation. If you have an idea for a penny stock, it is important to do your research first. That's why switching to a hard exchange like OTC markets is a great alternative. To protect you, we recommend focusing on high-quality companies that are unlikely to be targeted by shady investors and market manipulators. That would include penny stocks with a healthy volume and active trading, as well as those companies you may have heard about through online forums, chat groups, and other trusted sources. There are so many risky penny stocks out there, so it is important to diversify your portfolio and not put all your eggs in one basket. Have a strategy. Consider your risk and rewards before deciding on your buy or sell point, where you would exit the trade or hold the positions regardless of price action. Choose companies for the long term. Choose quality companies that have a long-term potential for growth and be willing to endure slow periods when the price may be lower than expected. If you want to know where to buy penny stocks or just want to do some research, you can use an online stockbroker. Most brokers offer penny trading and will help guide you through the process of buying and selling these stocks. For traders looking for recent penny stocks to trade, we recommend starting with a penny stock screener or market mover list. For example, Yahoo Finance Trending Tickers and Small Cap Gainers page both list companies that have jumped in price for the day. The best time to trade momentum stock is after the market opens at 9:30 a.m. Eastern. After you found the stock symbol, you may need to accept an enhanced risk disclaimer related to the increased risk that comes with trading stocks not listed on a primary venue, such as the NASDAQ or the NYSE. Penny stocks often have a smaller number of shares traded per day, making them susceptible to manipulation. Since they're prone to such schemes, they may not be the most strategic investments. If you are trading penny stocks, don't buy more shares than you can bear. Securities that trade for pennies carry a lot more risk because they trade OTC and do not meet the strict financial requirements to be listed on a major stock exchange like NASDAQ or NYSE. Does Robinhood support OTC stocks? Robinhood does not support trading on the OTC market. The only penny stocks supported are those listed on either the NASDAQ or NYSE. If a company listed on the stocks coded only trades at $1 for a certain period, it would be removed from the OTC list. As a result, these OTC stocks are risky. Are you ready to make your first investment in OTC stocks? In reality, all you need to buy OTC stocks is access to a brokerage account that allows for OTC trades. This can be done with an account at any legit broker, though it's more expensive than regular stocks. Full-service brokerages often have this functionality, as well as discount brokers that often have trading fees. When it comes to OTC BB stocks, you want a broker guaranteed to let you execute trades. as pro brokers can handle your trades with ease that only experience and expertise can provide. They're available 24/7 and come with all the necessary products for executing successful OTC BB trades. It's important to understand the market for investing in any company. For a comprehensive evaluation, use research tools such as Google Trends or data metrics to look for potential niches and do further analysis of your interest. Alleviate from penny stocks that are vulnerable to scams. Diversify your portfolio and avoid investing in high-risk investments. Have a plan for what to do when you enter and exit your funnel. Know the quality of the company you're working with, whether it's short-term or long-term contracts. Take the time to get a clear picture of your business objectives and timeline. Penny stocks are the riskiest type of investment, featuring high volatility and small market capitalization. However, it doesn't mean they can't reap big rewards in the right hands. If you're interested in trading penny stocks, you have several brokers to choose from to find the right one for your needs. To keep up with changing regulations in an ever-changing market, a brokerage of this size is needed to be successful in asset management. Among the top 5 OTC trading brokers listed above, each has a mobile app that makes it easy to trade. Fidelity, TD Ameritrade, Charles Schwab, TradeStation, and Interactive Brokers. Investors often invest in penny stocks because they can buy a large number of shares for a small amount of money. If the company turns out to be a success, the investor could see a 100 times or more return on his original investment. If the company's executives and technologies fail, the loss is usually small. Why are OTC stocks risky? How are OTC stocks different from regular stocks? Company stocks trading on the OTC market face less stringent disclosure requirements and regulations than those that trade on other exchanges. Fewer disclosures means companies are more likely to be able to keep their activities away from the public eye. Penny stocks tend to have an unclear financial outlook and murkier information and can be risky investments compared to normal stocks. OTC stocks are difficult to trade and provide no liquidity or safety measures. This makes it hard to enter and exit your positions. An important part of securing a big payday is to see the stock first listed on either one of these two markets at a price above $10. That's it for this video, Fortune Fastlaner. Remember to subscribe to our channel. And if you feel like we've delivered value, please share this video with one person. That's right, just one person, as a token of your appreciation for the hard work we put into making content that educates and helps you on your mission of building your fortune. Remember, you can watch video after video, but it isn't until you take action that you'll start to see results. See you on the next one.